Okay, all set for the market opening. Remember, a couple of levels to watch. The 200-day moving average of 17,400 or thereabouts is something that has been a good support for a while. Does it hold today? Time will tell, but that's an important level to watch. And on the upside, as we know, 17,800 has been a bit of a resistance for the market. So these are sort of the markers on the index. The first tick is not looking good. It's quite an ugly picture that we have this morning. The Nifty is down 170 points straight off the back. That's a 1% crackdown in early morning trade. The Sensex has lost almost 700 points, and it's the Bank Nifty that's really dragging the market this morning, down 500 points. As I was telling you earlier, a lot of the vulnerable names continue to sell off. So Adani Group stocks, enterprises, ports are your top losers in the frontliners. And then you have metals that's under pressure: Hindalco, JSW Steel, Tata Steel. IT stocks are not spared. Tech Mahindra, Infosys, TCS, HCL Tech all down about 1 to 3 odd %. And then you have a couple of these names like Grasim, Bajaj Finserv, Axis Bank that are also under pressure this morning. So let's check what is bucking the trend. Tata Motors, expectedly because of that IPO of Tata Technology, is holding up in the green. And a few and far between, really. There's a Britannia, there's a BPCL that's just about flat, and a Bajaj Auto that's just about flat. But otherwise, it's a very weak market. We are trending very close to the 200-day moving average. So, that seems to be, very precariously poised over there. Remember, the 200-day moving average is 17,427. So we've sliced that on the downside as well. A lot of levels are being taken out as we speak. It's not looking like a good start at all. In fact, now down almost 200 points. So after the initial gap down opening, yes, there's still some more pressure.
Well, it's a worrying opening actually, but the 17,400 odd mark very, very crucial, and that 200 DMA at around 17,430. The bulls will like to get the Nifty trading above those levels. Otherwise, it could be shaping up for a rather ugly trading session otherwise. But let's see whether or not a bit of a fight back could definitely be on the cards post yesterday's sell-off, and today as well you're opening up with a cut-off around 180 points. Select stocks though are doing well. A couple of stocks that Sonia mentioned earlier today on the Maharashtra budget announcement of electric vehicle focus. JBM Auto as well as Electra Greentech, well, both of them have opened up with solid gains, so just keep an eye out on them. Two stocks that had large trades yesterday. You had Home First as well as Gokuldas. Well, for Home First, there was a large seller in there to the tune of close to around 8% odd, but marquee names came in there. And even for Gokuldas, half of the PE stake has got sold, with marquee names coming in there. For starters, though, both those two stocks in line with the market are down close to around 1%. NBCC, there was an order win out there, so that stock as well has opened up well in the green. And from the Adani Group stocks, a couple of stocks that have opened up in the green actually. Adani Green, big volumes out there, that's up close to around 5%. Adani Transmission as well as trading in the green, and Adani Total Gas. All three of them are trading with some green. On the losing end, you have Equitas Small Finance Bank. The stock is down 12% as we speak. So just keep an eye on that one. And banking names, they are getting hit very, very hard. And the Bank Nifty, that's going to be the swing factor for the day. It's down 610 points. You have South Indian Bank, UCO Bank, some of these smaller banks as well. They're taking it on the chin as we speak. Surabhi.
Bad one. No other way of putting it. And I'm just going back to Wednesday. What's the difference between Wednesday's gap down and today's gap down? I'll tell you what, that there's intense pressure today. Wednesday, in the first couple of minutes, you started seeing an attempt at a pullback. There's no sign of that visible as yet. It's a whole 200-point drop on the Nifty. 200 DMA obviously is distant memory already. On banking, it's not just the large names. Look at the smaller ones like a Karnataka Bank, Union Bank, RBL Bank. It's cutting across lines. PSU, private sector, doesn't matter. But banks are getting slammed down all over the place. I just saw Sequent Scientific, by the way. In a market like this, Sequent is still running after 12-13% up over. Just reminding you, all they've done is they've decided to walk away from an earlier acquisition. That one's just been defying gravity ever since. Market's down 203, 17,387. The next level that immediately comes in focus is the February low. We're still a distance away from that mark. Remember, 17,255. But people will start looking at that as a big marker. Nigel?
Just one point I wanted to make. In Equitas Small Finance Bank, the reason the stock is low is because there was a pending merger. And those merged shares, have come about. So if you're holding Equitas Holding, then you've got the Equitas Small Finance Bank shares. Okay. So those that play that merger, it's likely that since they've got the shares credited, they're booking out, and they played that that opportunity that was there, and that's why they're selling out.
Also, I just want to mention there's really a steep fall that you're seeing in PSU banks right now. And remember, this whole PSU space is something that has had a very volatile. Of course, last year was very good. This year, the sell-off began, but now this has become a vulnerable pocket once again. Union, UCO, PNB. Bank of Maharashtra, Bank of India, all these stocks are down anywhere between 2 to 4 odd %. So there's one pocket that's selling off both in terms of price as well as volumes. And the market now is almost inching towards a 200-point loss. So not looking good at all at the moment.
And also, there's absolutely no counterweight, right? Earlier in this year, IT was a constant counterweight, though India was underperforming. Now, I mean, you've got this whole global overhang becoming much, much more vigorous. And IT is no longer that one batsman who can kind of support you and make you stand through the innings. So that's the market that we're in the midst of. Let's take the conversation straight away to our market master of the morning.